In the ever-evolving world of electric vehicle charging, there's a company that's been making waves in the stock market. EVgo Incorporated, with its recent market cap touching a whopping $1.6 billion, has been a topic of interest for both individual and institutional investors. But what's the story behind this surge, and how might it impact the future valuation of the stock? Stick around as we delve deep into the intricacies of EVgo's recent performance and what it could mean for potential investors. Okay, let's take a closer look at the news. EVgo Incorporated, listed under the Nasdaq as EVgo, has recently seen its market cap touch $1.6 billion. This growth has been beneficial for both individual investors, who own a significant 58% of the company, and institutions. Last week alone, the company's market cap saw an increase of $96 million, and while individual investors reaped the most benefits, institutions also enjoyed a 35% share in those profits. Diving deeper into the ownership structure, it's evident that individual investors hold the majority stake in EVgo. This means that these investors stand to gain the most from any upside potential, but they also face the maximum downside risk. Institutions, on the other hand, hold a respectable 35% stake in the company. This institutional ownership suggests that analysts have taken a keen interest in the stock and see potential in its future growth. However, it's essential to note that if two significant institutional investors decide to sell their shares simultaneously, it could lead to a substantial drop in the share price. The Vanguard Group Incorporated, for instance, is the largest shareholder with 6.3% of shares outstanding. The second and third largest shareholders hold about 5.7% and 4.9% of the shares, respectively. Interestingly, our studies indicate that the top 25 shareholders control less than half of the company's shares. This means that the shares are widely disseminated, and there isn't a single dominant shareholder. This distribution can be both a strength and a weakness, depending on market dynamics and investor sentiments. Another crucial aspect to consider is insider ownership. Insiders, in this context, include board members and top-level managers. Our data suggests that insiders own a significant portion of EVgo Incorporated. This insider ownership, valued at around $17 million at current prices, indicates a strong alignment between the company's leadership and its performance. Lastly, private equity firms hold a 5.7% stake in EVgo. Their influence can be pivotal in key policy decisions, and their involvement might be seen as a positive sign by some investors, as private equity often encourages strategies that highlight a company's value. In conclusion, the recent surge in EVgo's market cap and its ownership structure paints a promising picture for the company. The significant individual investor ownership suggests that the company's key decisions are influenced by a larger public, while the institutional and insider ownership indicates confidence in the company's future trajectory. Given these factors, there's a strong potential for an increase in the stock's value, making it an attractive proposition for potential investors. Thank you for joining us on this deep dive into EVgo Incorporated. If you found this analysis insightful, please give this video a thumbs up, subscribe for more content, and share your thoughts or questions about EVgo's future in the comments below. We'd love to hear your perspective.